What if I told you that Bitcoin could still go 300x from here? That target is coming straight from today's guest. There's one rule every Bitcoiner lives by: never sell your Bitcoin. But what if I told you there's now a way to unlock your Bitcoin's true spending power without ever letting it go? I've been using this technique for a long time, and today I'm sitting down with a man who's turning legacy finance on its head and turned Bitcoin from a cold storage asset into a weapon for financial freedom, Jack Mallers. You might know the story of El Salvador making Bitcoin legal tender. His fingerprints are all over it, but that's just the start. Don't let his fresh face fool you. Jack just raised $4 billion to build the rails for Bitcoin native financial future. That's the kind of validation you only get when the world's wealthiest players see your vision. And today, I'm bringing that to you. This is about making Bitcoin truly usable, letting everyday people spend, borrow, and live on Bitcoin without ever selling a single Satoshi. But the system, it's still broken. Listen to how Jack sees it.
And it's a damn shame that you have a $2 trillion asset class, the best performing asset class in the world in human history, and you can't get a credible loan from a regulated institution that you know is not doing any funny business.
The problem Jack set out to solve, instead of building another casino, he chose to build vital infrastructure that Bitcoiners desperately need.
We don't offer any other cryptos on our platform. We don't offer compounding speculative features like options. We offer financial services.
Because, as Jack puts it, someone needs to fight for the people who actually get it.
You know, someone has to focus on financial services for the Bitcoiner.
This is your front row seat to the future of money, where conviction meets innovation, and holding your Bitcoin doesn't mean missing out on life. So get ready. If you've ever wondered how far Bitcoin can really go, or how you can finally put your stack to work without selling your soul, this is the one conversation you can't afford to miss.
In today's purchasing power terms, Bitcoin is competing over $300 to $500 trillion worth of value, and right now it's at 2. So in purchasing power terms, I think it's got 1 to 200-300x left in it.
In today's show, we discuss exactly how Bitcoin reaches numbers higher than anyone can even imagine. So guys, let's dive in and welcome Jack to the show. All right, guys, so we're here with Jack Mallers here today in studio, here in Las Vegas, Bitcoin Vegas. Jack, thanks so much for joining me. This is, basically, I would say, like you're the lifeblood of what I see you always talking about is Bitcoin. I mean, me too. I've been, for me, I get a little bit more in altcoins, but like I'm still always been orange pilled. I wear Bitcoin every day, all around me, all the time. And so how's Vegas been for you so far? And just some of that.
Well, thanks for having me, bro. Yeah. Vegas has been cool. I've told this story, my parents got me into Bitcoin. My stepmom started the first Bitcoin meetup in Chicago, where I'm from. So to go from my stepmom.
No way.
Yes. The Bitcoin mom on Twitter. I shouldn't tweet anymore. But the point of that story, I came home from school one day, backpack on, the whole nine. I was 18. Andreas Antonopoulos was in my living room.
Yeah.
For the first ever Chicago Bitcoin meetup. Cool. And so to go from that, where I took my bag off and was like, wait, so money's going to do what? To go from that to this, this asset's come a long way. I'm proud of the community, the developers, the whole nine. This is pretty cool, man, to see a sitting vice president. So I'm having a ball.
So I'd love to do a lot of the conversation about the things that Andreas really preached about, but we don't have time today. But if you guys are watching this, you are obviously, make sure that you go check out Andreas Antonopoulos, check out his stuff, especially from 6, 7, 8 years ago. Unbelievable, right? And I think that's one of the problems with people that come into the space today. They look at, it's always, if you tell someone you're in crypto, like, oh, so you trade it, right? That's the first instinct always. It's like, they don't understand that there's a lot of stuff being built here. But what would you tell people that are watching this, haven't seen Andreas Antonopoulos, or aren't really familiar with, why is it that you're so passionate about Bitcoin? And not just that the fact that it's become this globally accepted asset, but what are the pillars, like Andreas used to say, that make Bitcoin so unique? That's not only the immaculate conception, but also unreproducible.
Well, for Andreas, what Andreas unlocked for me is the role that a neutral money could play. Money I think people don't entirely grasp the role it plays in today's society. How many products in the market can you say all 8 billion of us have to use outside of water?
Water.
Right? Not everyone has an iPhone. Well, not everyone wears Nikes. Yeah, a lot of people use Amazon, but not all of us. Money is a technology we invented to solve for barter that we all use. Yeah. And so to contextualize that, I mean, Andreas to me was the first to broaden the scope of this is not a niche computer science project. This is a world-changing technology. We're talking about money. We're talking about a neutral reserve open source project that can fundamentally realign how we transfer and store value. That was, I like took my backpack off. I was like, bro. So that to me, he was the first to really convey the gravity of what we were all a part of. That is, I think, Andreas's most pivotal accomplishment, which at the time there was no such. Now, we're swimming in the brightest minds. This asset class just breached $2 trillion of market cap. But back in the day when it was $50 a coin and Coinbase just launched, Andreas played that role, and we owe him a lot for that.
And so it's Andreas and Roger, really, that's were the two biggest advocates. Roger was the boots on the ground. Andreas used YouTube.
Yeah.
What do you think about Roger? And the question is really prefacing, I think, regardless of what you think he did with Bitcoin Cash, and that's what I want to get into. Mm-hmm. But I do think that in addition to Andreas, like Roger did a tremendous amount for growth, adoption. He was the biggest like evangelist mm-hmm. We've ever seen. But I guess the question about Roger isn't more so about Roger's personality, but the Blocksize Wars. Yep. And for those of you guys who don't know, the Blocksize Wars was like 7-8 years ago. Yep. Huge debate between how Bitcoin potentially scales. And at the time, we started seeing transaction costs boosting significantly. People were complaining that it was slow and expensive and that it couldn't achieve what Satoshi's original vision was, which was a peer-to-peer digital cash system. So we had these wars and it was heated for like a couple years. And eventually we decided to go on, keep the blocks small. And then there's this conspiracy that, it was done so that we can, centralize things using lightning networks and this kind of stuff. I'm really curious what your thoughts are on that.
So what I would tell the audience, yes, it was about scaling Bitcoin. What it was more fundamentally about, in my opinion, was who is in charge of Bitcoin and which properties of Bitcoin are the most important. Is Bitcoin valuable to the world because it can make a fast payment? Or was Bitcoin valuable to the world because nobody could control it, nobody could change it? Because yes, sure, just this one little variable that might increase its transaction throughput for a second, but then you extend that to, I want to make the 22 millionth Bitcoin. And so there was a huge debate over, you're not the main character. Corporations do not call the shots here. This is a distributed network. If you want change, you need consensus.
Yep.
And that if we give an inch here, we'll give a mile. And the community really took a stand. My opinion on Roger, listen, I think for people in Bitcoin throughout its history, you can be both grateful and dismissive of what you think is bad behavior. I mean, life is full of nuance. It's not black or white. And I'm immensely grateful for some of Roger's contributions. But if you learn one thing being a Bitcoiner, you learn to kill your ego. When I advise El Salvador, when I advise corporations, when I talk to people in the White House today, you are not bigger than Bitcoin.
Right.
And that is the point. You are not the main character. And once you understand that what's in your best interest is to just be a part of it, that's when Bitcoin doesn't need you. You need Bitcoin, whether you're an individual, a family, a corporation, a government, right? And so I think Roger felt that his own interests and his own opinions were of more value than the consensus of the network. And that is where I think he lost his way, in my personal opinion. Doesn't mean I'm not grateful for his early evangelism, but the minute that you think you control Bitcoin and you call the shots is when historically I've seen people fall victim to this industry.
Yeah. Well, I mean, I guess your Stike is basically built on the fact that Bitcoin isn't really scalable as a peer-to-peer currency system at its core, right? So, I mean, at the end of the day, whatever the outcome was, which was to keep blocks small, that's what enabled you to essentially, and the reason why you created Stike essentially, right? To make Bitcoin payments easier.
Yeah. So my founding story for Stike, before Stike, I started the first open source Lightning Network wallet. I initially wanted to start it because I wanted to humanize this stuff. There was such a fierce debate over, wait, Bitcoin can achieve instantaneous cheap transactions through layers. What does that mean? Let's just increase this one variable. And we would have killed the project as we know it. If you start changing Bitcoin, you ruin all credibility for this asset class, this immaculate conception. And so all I was trying to do as a kid at the time in my room was, everyone calm down. Let me as an engineer build the wallet so that you guys can experience it for yourself. Free open source, but I just want you to see what proper technical scaling would look like and show the world that it's possible. Because people rightfully get frustrated. And how do you scale and self-organize a distributed global system? It's never been done before. Never. And so that was, it was called Zap, little Bitcoin history for people at home. And I launched that. That inevitably became what is now Stike through this realization that no one was focused on Bitcoin financial services. Coinbase, Robinhood, Kraken. The way I think about these businesses, which are successful businesses, they monetize speculation. Their product ads are more coins, more ways to add leverage. Maybe they're now getting into the options market, Coinbase.
Yep.
No one was focused on Bitcoin financial services. So for Stike, brokerage services, we offer a lending product. We offer payment products. So we don't offer any other cryptos on our platform. We don't offer compounding speculative features like options. We offer financial services. And so that's when I started to work on Lightning. I realized, why is nobody else focused on making Bitcoin more useful for the world? I thought it was kind of like a see the forest through the trees type of thing, is that there's this local hill that everyone was obsessed with, more coins and ICOs or NFTs or whatever the craze was at the time. But no one was focused on the fact that this is an asset class going after $400 trillion worth of savings in the world. You know, people are going to need a loan. People are going to need to be able to make payments. People are going to need insurance on a vault custody. And how on earth is nobody working on that? And so that's when I became a founder. And that was this kind of natural evolution of, you know, wanting Bitcoin to have a chance to change the world in what I believe is the right direction, which is kind of, you know, why I am where I am today, but kind of naturally happened that way through the Blocksize Wars, kind of kicked my career off.
Yeah. Makes sense. As someone myself who has used extensively crypto lending products,
Yep.
I was looking at both Celsius and Nexo, and I knew about Aave at the time, but I couldn't collateralize Bitcoin, and you still can't today, but I'll get into that in a second. Luckily, I actually chose Nexo instead of Celsius. I didn't lose like everybody else in that situation. But as a decentralization, I don't know if I'd say call myself a maxi, but I pretty much am. Like I really love that idea of removing middlemen, and we're seeing it work with Bitcoin, and I'm hopeful that in the future we see it work with applications as well. It's probably less of like an urgent, dire need for that to happen, like there was with money, because I think disrupting the US dollar was really important and having a safe place to go. But it's funny, and it just shows us in the industry and those of you watching how early we really are. Because as someone who's been in Bitcoin since 2012, loved the idea of decentralization, it took me a long time to trust smart contracts. And it took Aave being up for a long time before, with billions and billions and billions of dollars on the protocol, before I felt comfortable enough to take my Bitcoin out of a centralized custodian and put it, but then I had to make a trade-off, right? Because I had to take my Bitcoin on chain and then trade it for wrapped Bitcoin and put it in Aave. And there's pros and cons. And so I want to talk about your new lending product a little bit, because I'm someone who's personally interested in using it.
Yeah.
Yeah.
Good.
And I would say that I want to know a little bit about how it works, and I'm guessing it's native Bitcoin because that seems to be like in your blood. And there's a lot of things I love about Aave. For example, one of them is I don't have to talk to anybody.
Yep.
In 12 seconds I can get a loan, and there's no time horizon. I pay it off whenever I want to. You have an option for variable or fixed rates. And I've also learned that you need to be careful with it as well. Because the way I've used Aave a couple times, one, probably the smartest thing I guess I ever did, in a way, in December 22, I took out a loan to buy a house in Thailand, my only house that I lived in.
Nice.
And instead of having to sell my Bitcoin because I don't have fiat, I don't have cash. And so that was phenomenal, because otherwise if I'd sold my Bitcoin, I mean, God, it would have been so expensive, right? Yep. And so I think that's one of the most beautiful things about it. And I've heard you say before and talk about it, for those of us who are all in on Bitcoin and other crypto assets, if you believe it's in the future, it's going to go up, then you don't want to spend it, right? You need to finance your life. You need to maybe borrow some money, pay it back, later when you can. Another way that I've used it is to kind of leverage a little bit. So when the markets are really low, collateralize, buy some more Bitcoin, put it back in there, and then kind of do that. So, but I'm just curious. So one thing I noticed when I wanted to go with Celsius before is they had this time period. I had to pay back the loan within a time period. How does your product work?
So the product, simply put, 50% LTV. So we'll allow you to take out half the collateral value that you put up. You put up $200,000 of the Bitcoin, take out 100 grand cash. To your point, there's no credit checks. You don't got to call a representative and tell them where you went to college.
Cool.
It's Bitcoin, right?
Yeah.
And the fact that, Stike's operative in over 100 markets, we're going to eventually be able to offer this product all over the world. I mean, how on earth would I be able to give a loan to someone in Ghana? Right. They'd have to take a picture of their Ghanaian real estate and ask me to assess its value. I mean, it'd been impossible. So I don't need to know your credit worthiness. I don't need to know where you went to school. Deposit the Bitcoin, cash immediate, and we're a financial services platform. So instant withdrawals to your bank, pay your bills. I mean, we have a slew of products, buy, sell Bitcoin. I mean, we are the most useful Bitcoin app, in my opinion, in the world, because we focus on that utility aspect. So that's the product. It's a 12-month term. The announcement that I'm happy to share on the show, single digit interest rates. So one of what I think is an issue is that, Bitcoin, when you look at its volatility dynamics, so measured like 1 year volatility, it's no more risky than a US equity, an average US equity, right? Tesla, Amazon stock, Bitcoin is sometimes even less volatile than those, but you can get a margin loan on a US public stock for a mortgage rate. Right. And Bitcoin, a lot of these rates are traditionally 12, 13, 14, 20% at times. And so a lot of my job is sourcing deep pools of capital and building an accessible product that another product feature of ours, no rehypothecation. So the Bitcoin sits with us and our partners, and an iteration we're excited to unveil soon too is proof of reserves of that product. So I would say for our philosophy at Stike, listen, I am a free market advocate. People want to decentralize stuff, do whatever they want. I'm here for it. Do it. Humans should not be governed by anyone other than themselves. However, I do not think Bitcoin disintermediates the concept of a company. I think that companies are a market force for good, which is they're efficient. They provide a value and a service to people, and sometimes people value them enough to pay for it. Yeah. I think companies will exist. And the way that we serve our customers and earn the customers that we have is a hyper focus on transparency, a hyper focus on why we exist. We're not going to dilute our focus on 1,000 coins. We're just here to be the best at Bitcoin, and we're going to go to hell and high water to prove to you that we do not do funny business with your collateral, that we can get the cheapest rates because we're lean, because we're hyper focused on this asset in this marketplace. So it's not, I don't want to pitch, it's not a DeFi product. I don't think that these DeFi products will be of as caliber as a centralized solution. That's the trade-off you're making, in my opinion, at the end of the day, is you don't have to trust a business with DeFi, but it's not going to be nearly as powerful as a business that's capable of accumulating large pools of capital and centralizing things. And so we are a company that earns the trust through transparency and again, through our focus. And so that's the product and where we are unique in that respect. And so I'm very excited to finally I can give a loan up to $1 billion per loan. Damn. So we have a lot of capital, cheap capital, and it's a damn shame that you have a $2 trillion asset class, the best performing asset class in the world, in human history, and you can't get a credible loan from a regulated institution that is not doing any funny business. And we took that a little personally, that how has nobody done this the right way? And you were all supposedly waiting for Chase Bank and Larry Fink to do it. And I thought that was a little bit ridiculous of an attitude for an industry as well. So that's the product. And, I loved your example on how you've used loans in the past. What I call this dilemma, I think it's a hodler's dilemma. Yeah. Right. No one wants to sell their Bitcoin, but money is a means, not an end. Have you heard of Mises and his gold? Have you heard of this old tale? I love this to make the point. Guy acquires gold, buries it in his backyard in a hole, and every day walks to his backyard, admires and looks at the gold in the ground, goes home, goes to bed. Back and forth, back and forth, back and forth. His neighbor realizes there's got to be something valuable there. One day goes in, steals the gold while he's sleeping. He comes out, empty hole, his gold's gone. Crying. His partner comes out and said, "What's wrong?" Says, "Someone stole my gold." Said, "Well, all you did was look at it. You might as well put a rock in there. It'll serve the same purpose."
Mm-hmm.
The money is no good if you aren't able to live in a home, if you aren't able to get married, if you aren't able to travel and experience, right? And so the question is, how can you acquire and not part with your scarce, desirable asset, but live life, start a business, fall in love, right? And the fact that, this is how global trade was built, like the VOC. These businesses were built in the 600s by collateralizing their ships and their land. U.S. railroads were built by collateralizing U.S. property. Manhattan was built. Nobody acquired Manhattan real estate 400 years ago and then, oh, shoot, my kid wants to go to college. I got to sell it. Yep. No, you borrow against it and you build a bar on that property or you build a stadium there. And so that is human progress has been built on hoarding and owning the most scarce, desirable hard assets you can in not letting go, right? So now debt is like fire. It can change and heat a civilization. It can heat your home. Too much of it, you're going to burn everything down. So I preach responsibility, but we're a sophisticated enough species at this point where people can use the power of Bitcoin, its performance, and the ability to borrow against it. And so that's kind of my philosophical thesis on why this should exist. And someone's got to do it the right way.
Yeah. After 1 year, do you think that there's going to be a chance to refinance that? Or
yes.
Because I think
good question
for someone would be interested in using it, I think the most intimidating thing for me as a potential client would be the fact that I don't know where we're going to be in the market after a year,
yep.
right? And so you ideally want to pay back your loan, maybe from more speculative. I always encourage my audience to do a barbell strategy, right? 85, 90% of your speculative, whatever you want to call it, you're in Bitcoin, right? And the rest in like more speculative stuff that maybe performs, take profits into Bitcoin or pay off your loan.
Yep.
But to me, one of the things that I really love about Aave so far is just the fact that I don't have that time horizon on my mind. Yep. So I know that if I need to extend, I can. How does that work?
Same thing. You can open multiple loans on Stike and you can refinance. So I'll tell you guys how I use the product. So I borrow against a smaller fraction of my stack. Call it anywhere between 2-10%, right? Now that is valuable because if the market goes down over the course of 12 months and we have a bear market, I got plenty of collateral I can go post. And the fact that I know at Stike, nothing's moving, I'm gonna be able to see it on the blockchain. So I can go get more collateral. But then when the year's over, I take out a separate loan, I refinance it, I take some of the proceeds from that new loan, pay off the old one, and I keep the ball rolling. And if you're getting a single digit interest rate on an asset that's compounding at 60% on average a year,
yes, exactly.
Well then, the math works out where the asset doubles. You take out a loan with the same collateral you had, but it's twice the size this time. You take some of the cash, pay off the old one, and you're rocking and rolling. Yep. And I, like you, don't own cash either.
Yeah.
So it's a beautiful product for me. And again, that's, someone has to focus on financial services for the Bitcoiner. And that is why I became a founder, is because, God bless all these other businesses and all their thousands of tokens and stuff. But that, I just want a financial service for like the sats I've acquired.
I completely agree. And I like I said, I've used it for years. Since 2018, I've been using either one form of lending against my collateral, and it's completely saved me from actually spending all of my Bitcoin. I used to spend my Bitcoin a lot. Back in 2012, 13, I had a ton. Yeah. And then I had to. I went all out of cash in 2013. And so I've spent a lot of Bitcoin. And then when these products came along, thank God for them. Yeah. Like literally thank God. And so actually I talk a lot on my show about using Aave. Forget that it's Aave. Let's just say it's your lending product or any Bitcoin lending product.
Sure.
You did just briefly touch on it, but like if somebody believes that it's going to continue to compound at 60% a year, have you worked out like mathematically what a good strategy would be if someone wanted to slightly lever and bet on, so for example, taking out $100,000 in your $200,000 collateral example, taking that 100 grand, buying more Bitcoin, putting it back in as collateral.
Yeah.
Right? Now you've got $300,000 as collateral. You've got a $100,000 loan. Your LTV is sitting pretty good.
Yep.
And then the hope is that maybe Bitcoin doubles over the next year, pay back your loan, that strategy.
Yeah. Well, so to continue that math, you have $300,000 of collateral, $100,000 liability, and that you owe that money back. Your collateral doubles, so it's now worth $600,000.
Yes.
We let you take 50% LTV against that, so you're now able to take 300 grand out of that 600. You take 100 of it, pay off the old expense. You got 200 left.
Yeah.
You buy more Bitcoin, live your life, start a business, get married, whatever you want. And so yes, there is math there. What people need to protect themselves is if things don't go your way, right? That's what we all need to work out.
Exactly. Yeah.
So if Bitcoin goes down 80% for a year, for two, do you have the collateral necessary to come make sure that you're not getting a margin call?
Yeah.
And that's what I would advise against. And so it just depends on how much Bitcoin you own. So I like to think in percentage terms of my stack.
Right.
And so I prefer, the 2 to 10, maybe 15, 20%. I'm sure the math would afford you to go higher than that if you wanted to, but now you're making a pretty specific assumption that
Yes.
Bitcoin's only going to go down a certain amount for an extended period of time. I'm not in a position in my life where I want to take that risk, but I've been buying Bitcoin for 13 years and maybe someone else has a different, risk profile and a different portfolio, but that's just some of my mental model. But that math you walk through is useful. If the collateral doubles and the LTV is 50%, you can continue to draw out of a number that's going up a lot.
And last question on this product that you have.
Yeah.
What do you have in place to warn people if they're getting a little bit in risk of margin call?
So the product, we pride ourselves on our UI UX. So you can go view the health of your loan whenever you want. Open the app, every single metric dashboard that you want to view the health of your LTV, where your margin call sits. And by the way, there's a difference between a margin call and liquidation.
Yeah.
Margin call is, hey buddy, I really don't want to take your Bitcoin from you. You got to put some more in here.
Yeah.
You're pushing me to the limit. That's a margin call. Liquidation is when I don't have a choice.
Yes.
And so all of that, notifications, email, we make you put your phone number when you get a loan, just so that I can call you.
Fantastic.
Again, we pride ourselves on principled ethics. We take a lot of the Bitcoin ethos and I try and build a company around it. And so we do everything we can to protect our customers, because our customers are the reason we're in business. I'm not here to liquidate you, but
business.
I have to, because if I don't run it properly, then we all lose. So we try and do our best, and anyone that has feedback, I'm all ears, right?
Yeah. Well, Jack, thanks so much for coming on today. Awesome to hear about your products. Where can people learn more if they want to use, because it's now live, right?
It's live. Yes. The app is Stike in all your app stores. Download it, give it a try. If you don't like something, tweet at me, but I think you're going to love it.
Guys, okay, so these Bitcoin conferences are very hectic. We had to do part 2 on a stream. So that's coming up next. All right, Jack. So we're back and we're in different places. But right before we spoke was literally right before you're about to go on stage on Bitcoin 2025.
Mm-hmm.
So we kind of started to kind of get into some of those announcements you were going to make. Just quickly recap for those who didn't see your keynotes. There were some pretty big ones. What was the biggest thing that you talked about?
Yeah, well, on the Stike side, we announced our new Bitcoin lending terms. So we offer collateralized Bitcoin loans. So you get cash against your Bitcoin. It's 50% LTV, no origination fee, no early repayment fee, and rates as low as single digits now, which we're super proud of. And no rehypothecation as well. Didn't quite make the announcement, but we're excited about a proof of reserves iteration of that. But we want to be the most credible, trusted, accessible lender against your Bitcoin in the world. And we're also live in over 100 markets. This is our traditional products, so our brokerage and wallet products. This product is currently in the United States, but we're very excited to rapidly expand it as well. So just what I announced is our entry into the Bitcoin lending space, which is plagued with a lot of bad actors and a terrible history. And I think that's a shame, because Bitcoin is the most pristine collateral and the best performing thing that we all have access to. And you should be able to get liquidity without having to sell it. And I've almost taken that mission personally with Stike and trying to embark on that. So that was what we announced on the Stike side. Now I'm the CEO of 2 separate businesses, Stike and then also 21.
Yep.
So 21, we're the 3rd largest corporate treasury in the world. And for 21, we launched proof of reserves. So for a corporate treasury of our size, I believe we're the largest corporate treasury to offer proof of reserves so that anyone in the world can verify without having to trust that we own the Bitcoin we say we do. And so we announced that same day. And later on, a week later, which was late last week, we published that. So the Bitcoin lives in a combination of 5 addresses. It's a little over 37,000 Bitcoin at the current moment. And
Crazy.
upon approval of the transaction where our stock would list on a stock exchange under the ticker XXI, we expect to have at least 42,000 Bitcoin.
Congratulations. That's pretty
Thank you,
awesome.
brother.
And just skyrocket up the treasuries list. Hey, have you seen this? It was originally on Showtime and now it's on Netflix. I just started watching it like over the weekend. This Super Pumped, the story of Uber.
No.
Oh man. Yeah, I was curious because I was just watching the story of Uber and it says like Travis, the guy who founded Uber, breaks into new markets, rapidly growing, rapidly expanding. And kind of it's fun to watch. You seem nothing like this, the founder of Uber, as far as your personality. The guy was
in what way?
Well, he was a proud asshole. You seem much nicer, So
don't tell my employees. Maybe they describe me differently, but no, I appreciate that.
Yeah. No, but it just seems really cool to be part of a company that is rapidly expanding. First focused regionally. Like for the companies that I founded, because we were just marketing to a wide audience, it was not, and we didn't have to deal with regulations, and so we were dealing with like a global audience. But when you kind of focus on one country first and then kind of nail down that product market fit, then it's kind of copy and paste into other jurisdictions. Of course, you have to go through regulatory frameworks and those kind of things. And, entering something like China is going to be much more difficult than going to, let's say, the EU or something like that.
Yeah. I mean, for Stike, so a lot of my vision for the business is one, you talk about a Kraken, a Robinhood, a Coinbase, not that there's anything wrong with these business models. They produce cash. They're good businesses on paper. But for me, it's the shit coins that, I'm what, your audience would understand as a Bitcoin maxi. And I've always considered, forest for the trees is that Bitcoin is the opportunity. And as I grew up in this industry, I was shocked that no one was focused on Bitcoin financial services. So we're very different than these businesses. And I found it kind of humorous that Kraken was adding stocks, Robinhood was adding crypto. So you've got these businesses that focus on speculating in different massive markets, now trying to converge and combine in more speculation. And they're really just monetizing the need for everyone in the world to speculate because all of our currencies are being debased and all of our savings are being eroded. And so everyone's a speculator, whether you like it or not. And that's what these businesses are. But you see these things like fart coin, and you create your own blockchain and you wrap it and then you wrap it again and then you wrap it again. And for me, it was like I was never interested in those things. I thought Bitcoin is going to be $100+ trillion asset class. Someone has to focus on it and build trusted financial services on top of it and do it in all of the markets around the world. So I think that's the first differentiator in our business. And then secondly, is I always thought that there was a massive brand opportunity on top of Bitcoin. I mean, Bitcoin to me combines the incredible business of financial services. These are very high margin cash generating companies. The problem with internet companies like a Facebook or a Snapchat, how do you monetize it? How do you make money? Poor Zuckerberg's in and out of, judicial courts violating all of our privacy laws every other year. Because every time he makes a lot of money, we're like, wait, how'd you make all that money? Didn't you just violate every single sense of like privacy that I've ever had? And he's like, yeah, sorry, I did. And then the stock crashes and it goes back up because he does it again. And so internet companies have the breadth and reach of billions of people. I mean, the guy, Zuckerberg's got 5 billion monthly active users. That's outrageous. But he has a tough time monetizing them. Financial services companies have been restricted to just local, regional businesses. Like Chase Bank isn't a global business, but they make a lot of money because selling a financial service, money is the only other product akin to water that we all have to use in our everyday lives, no matter who you are, no matter where you are. So to me, Bitcoin combines those two. Is you get to sell financial services, get a loan, custody your savings, buy and sell based on liquidity needs with the profile of an internet company. And so we're just going to focus on Bitcoin. We just want to be one of the best in the world at this one thing. We're not going to dilute our focus. We're not going to spread ourselves thin. We're not going to be complicated. We're just going to do the simple things on top of Bitcoin well, which sounds like a dumb idea. Like surely someone else has done that. No one else had done that. And so that's when I started the business. And so, yeah, for our lending product, you'd think surely for a $2 trillion asset, someone else had figured out lending. No, they hadn't. And they hadn't done it globally, and they hadn't done it at the rates we found, and they hadn't done it with the brand we have. And so I would say that, Stike as a business is very Bitcoin focused and just trying to do the simple, trustworthy, credible, principled things really, really well on what we believe is the opportunity, which is Bitcoin.
On 21 shares, 21 or 20, is it 20 shares or 20? Yeah, 20 shares.
Just 21.
21.
Just 21. Cool. Yeah.
Even better. So why do you think that your investors gave you $4 billion to buy Bitcoin?
Well, I think, my co-founders are Tether. So just so everyone knows, I'll tell you the co-founding story. So, I've known the Tether group for a very long time. And I mean, you got into Bitcoin, I believe, earlier than I. So I'm a class of 2013, early 2013. I think you were before me. And a lot of the folks that founded Bitfinex was before me as well. And so just by ways of overlap, Kyle, that if you've been around for a long time, the industry wasn't that big that long ago. Yeah. Whether it was the meetups or conferences, you'd run into the same people over and over. And so I've known guys like Paulo for a very, very long time. My favorite overlap of Tether and I is El Salvador. So I was a material part of El Salvador's story of adopting Bitcoin as legal tender. And since Tether's domiciled and headquartered there, they've done some incredible work with the country, both related and not related to Bitcoin. So I would say Tether and I both philosophically align on what Bitcoin means to the world, why it's important. Stike and Tether both uniquely serve at a serious scale Latin American and African markets. So call it Bitcoin friends. And one of the reasons we founded the business is because the incredible work Saylor has done. It was hugely inspiring to us. But we felt that there was a huge opportunity to follow on with this new innovation we wanted to be blue chip credibility, startup upside, big enough to win, small enough to grow. We wanted to be a Bitcoin native business that was founded to be a financial services company, to use a lot of what Tether has built and what Tether has, use a lot of what I have learned and have with Stike, and access to the capital markets and access to a massive balance sheet of Bitcoin to be innovative and build cash flows and a different type of capital markets vehicle to participate in the Bitcoin story. So the goal of coming to market with such a big treasury was, one, because we can, because we want to get long. And it shows capital partners like SoftBank and Tether. I mean, it's going to be very difficult to come with that much institutional credibility to the market. But then guys like Paulo and myself, we're technologists. Before we were CEOs, we were engineers. And we were engineers of both open source protocols in this space, all the way to cash flow, high margin, high growth generating businesses. And so we wanted that blue chip credibility, startup upside. We thought that was an opportunity that the market was sorely lacking, is that we weren't a small cap that was maybe pivoting from a prior business that's looking for new life in Bitcoin. We are seasoned Bitcoiners that understand this asset very, very well. And we think we can bring new opportunities to the capital market. So that's kind of how it was founded. And the reason we have the size we do is because of the backers and the founding group that we have.
So why, can you explain this business model exactly? A lot of people are just going to say, well, why not just go buy Bitcoin spot?
Sure. So the goal of the business right now, so what we announced is an intent to be public, excuse me. Yeah. So it was a SPAC transaction. So assuming and upon closing, where our stock is listed on a stock exchange under the ticker XXI, it's a way for the capital markets to participate in Bitcoin in very specific capital pools, like potentially the fixed income market. So one of the instruments we used to raise capital was a convertible bond, for example. So, for us, if you can buy spot Bitcoin and you want to buy spot Bitcoin and you value Bitcoin and cold storage, to us, it's an entirely different product. It's not competitive to what we're offering, and I don't consider it the same solution. To buy in a future state XXI, you're getting accretive growth to Bitcoin. So the business, we care only about our Bitcoin per share, is that if you buy a share of 21, let's say in a hypothetical sense, Kyle, that share represents 0.05 BTC per share. Mm-hmm. My job is launching products, closing deals, raising capital, is to grow that to 0.06, 0.07, 0.08. So it's actually an accretive instrument that works for you and grows your exposure to Bitcoin. And it's accessible in the capital markets. And a lot of our fundraising vehicles, like a convertible bond, is accessible to fixed income investors. We're talking about investors that are traditionally investing in fixed income, the 10-year. This has been the most brutal bond bear market, arguably in the history of bonds, period. The 64-40 portfolio is dead. We're reorchestrating capital flows. We're living through the most fascinating macro time of our lifetime, and investors need real returns. And so we're a vehicle that shows up in these capital markets that gives people exposure to Bitcoin. We call it, we want to be the best way to participate in Bitcoin. That's the technology and the startup upside. That's the pure common stock equity. That's accumulating Bitcoin in an accretive sense. We think we can be competitive in all of those in a very specific market. Now, granted, it's the biggest market in the world. That's, the public equities market here in the United States of America. But to say, I want Bitcoin in cold storage, so do I, by the way. My portfolio is not only 21. I own Stike shares, I own 21 shares, I own Bitcoin in cold storage, and they all serve unique purposes to me. And so we don't find them necessarily competitive. It's additive to this whole story of Bitcoin dematerializing the way we save and exchange value.
So when we were talking about the Bitcoin lending protocol earlier, I shared my story about how I used Aave wrapped Bitcoin, not quite as safe as cold storage Bitcoin. But nonetheless, it was the only option available at the time. The moral of the story was like, don't spend your Bitcoin. And one of the questions for a lot of people who have been watching, especially, I would like to ask you this as someone who's a Bitcoin maximalist. A lot of people are out there saying, it's too late to buy Bitcoin. It's already at 110 grand. What is a potential upside here? And I'm not one of those people of that opinion, but I want to hear your thoughts on it.
My mental model personally, so this is my personal opinion, not representative of either of my companies.
Yeah.
But my personal opinion and the way I think about this is us humans own collectively a little over $900 trillion worth of stuff. So that is sovereign debt, that is currencies, that is real estate, that is art, that is collectibles, that is precious metals, that is equities, so stocks. $900 trillion of stuff we all own in this world. About half of that, Kyle, we've monetized is what it's called. In other words, we're using it as a savings account. So about half of the stuff, someone doesn't own the $10 million art piece because they want to put $10 million on their wall where their toddler can pick up spaghetti and throw it at the painting and ruin the $10 million Van Gogh piece. They own the painting that's stored in a really safe place, not to consume it as art, but to save it because they think at a future date they could sell it for at least $10 million later. And so they own the Hamptons house, not because they're living in the Hamptons house, but they're using it as a savings vehicle to persist and store their wealth. So just by that simple logic, you're talking about humans have created and are looking to store and later exchange anywhere between $300 to $500 trillion worth of purchasing power today. And for me, that's the opportunity Bitcoin is going after, is that people forget money is a technology, just like any other technology we've invented. We invented it to scale society and solve for barter. And so the technology performs a very, very specific use case in the marketplace. And that use case is an ability to store and later exchange value within the market. Money is the one market good that you do not consume. Your Coca-Cola, your cheeseburger, your airplane, your car, you consume those things. You consume the car to move you around. You consume the airplane to fly you around. You consume the cheeseburger and the Coke as food and calories. Money is the one you don't consume. You acquire it to save it, not consume it, and to later exchange it for the things you need. And so under all of that logic, I personally believe in today's purchasing power terms, Bitcoin is competing over $300 to $500 trillion worth of value. And right now it's at 2. So in purchasing power terms, I think it's got, 1 to 200-300x left in it. And that's not in dollar terms, because obviously as the dollar gets debased, it's distorting your understanding of purchasing power. So how long that can take and how that will unfold, that's where I don't enjoy speculating. But my mind, both on Stike and on 21, is that bigger picture of what if as humans, we didn't have to spend so much time and energy trying to save and later exchange the value we create for each other now? What if Bitcoin solves that technology piece for us and we can spend our time doing other useful things for each other? That's what I think is going to happen.
Do you think it's inevitable that Bitcoin becomes a global reserve currency?
Yeah, I do.
Let me rephrase that. The global reserve currency.
Yeah, I do. I think monies compete naturally. Yeah. Money wants to be won. One of my favorite times in a comical sense within crypto was when everyone thought there was going to be 77,000 different tokens to use in your everyday life. Like, I don't know if you remember, Kyle, but there was going to be a Subway token and a Chipotle token and a hair clips on Dodge token and then a hair clips on 77th and 49th token. And if you think about that logically, money wants to just be one, because if I walked into the hair clips on 79th and 45th, but all I had was a pocket full of Subway tokens, I can't actually exchange the value I've created for the things that I need. And that's money's job in the market, is to perform that one thing. And so money effectively just wants to be one. It wants to be one market good that we collectively all acquire in exchange for the value we're creating for each other, and then later sell in exchange for the value that we want from others. That's it. And so what money typically competes after is just very simple properties, like its scarcity element, how hard its hardness, and hard is in reference to how hard is it to create more of it. Bitcoin wins there. How easy is it to store? How easy is it to verify? A fool's Bitcoin between a real Bitcoin. How easy is it to transport? How easy is it to divide? So you want a money in a marketplace that can measure something as small as a grain of sand or as large as a professional sports team. A good money is able to measure prices at any scale. And so for me, Bitcoin wins at all of these things. And so inevitably, I do believe Bitcoin will be the market good that us humans use to transact, store, and save our collective time and energy, our effort, our labor. And it sounded crazy even a year ago, especially 10 years ago when you and I were really getting involved. But even a year ago, it sounded crazy. Nowadays, with the Trump administration and all that's unfolding with the trade wars and a lot of their rhetoric around the dollar as the world reserve currency and the damage that that's caused to the United States of America, I actually think we are rapidly approaching a state where Bitcoin is at least a part of the reserve asset. I think it'll be Bitcoin and gold initially, and I think eventually Bitcoin only.
Yeah. I've thought about the scenario a lot, especially over the past couple of years, as the BRICS nations prior to Trump were way more in the headlines. I mean, it seemed like every week there was more countries signing up to join, and I think at one point there was over 100. And that seemed, but even if they had made more progress on that, I forget what it was kind of called the unit, I think, or something like that. Even if they had more progress, I still don't know how that would have come to be. That currency takes trust to build. How does it manage and governed, and what's the monetary and fiscal policy? A lot to be, and then trust. And then you have to trust the issuers and trust the everyone. And Bitcoin does solve for all that. What is your updated timeline since the Trump administration came in for this to potentially happen? And I ask you that because you've been to El Salvador, not the biggest country in the world, but certainly a leader when it comes down to legalizing it for trade and building their own reserve. Have you had conversations with other world leaders or other nation states on their plans to adopt?
Yeah, so I think one of the most fascinating parts of my El Salvador experience is everyone pulled up a map and was like, okay, well, El Salvador is here in Central America, and so surely Panama's next because they're right next door, and they must, they're like neighbors but countries, and they must talk. And the reality is El Salvador didn't have its own currency and didn't have its own central bank, and so they actually didn't have the power of printing money, which going back to what we were just talking about, that's printing time and energy, that's printing human effort and labor. Like, someone can print for what another man has to spend 8 hours a day, 5 days a week grinding for. That's an immense amount of power. El Salvador didn't have to give that up. They were operating on the US dollar. They were a collapsed country after a civil war that was very decimated to them. So all of that context to say, I did not think someone like Argentina was going to be a quick follow, because they print money, and that's a superpower that's going to be very hard to forgive. I kid you not. I genuinely thought the United States of America would be next, but under an entire different line of thinking, which is they're the world reserve currency. When you're the world reserve currency, you have to operate in a deficit, because the good and service that you produce for the world is the currency itself. Think about it. Bitcoin was distributed to the world through proof of work and through mining. Very ingenious, clever thing Satoshi came up with. how is the dollar distributed to the rest of the world? From us, we have to print it and create it and hand it out in exchange for real stuff. So naturally, it's a policy decision that we operate in deficits. We accumulate a mass amount of debt. And then when you give everyone else all these dollars, think of it this way. You're giving them United States store credit, and then people have to come into the United States and go shopping. You do not, if you're China, you do not take the dollars that you're getting from the United States and turn around and invest in locally in your country, because it strengthens your local currency. It ruins your export business. All of a sudden, your labor is not cheap anymore. And so you take the dollars from the US and then you buy in turn US treasuries, or you buy in turn US land, you buy in turn US stocks. And so what you get in the United States is you get this massive wealth gap for those on the edges, California and New York. If you own stocks, you own nice land, your assets just can't stop going up because they're catching a persistent bid from all of the trade surplus and created new dollars. These dollars go to Russia, they go to China, they go to India, they go to Brazil, they come right back into the country, into your scarce desirable assets. And you have 90% of the country that's getting persistently more poor no matter how hard they work. And then all of a sudden you wake up, it's the largest wealth gap we've ever had, inability to manufacture anything, no middle class, civil unrest. By the way, when you export your ability to make anything, that means that your food sucks. Your food sucks. That means everyone's unhealthy. Everyone's unhealthy. Then the cost to maintain this, health and services is our biggest expense as a country. And, countries like Japan live 20 years longer than an American. Keeping an American alive is expensive now. So all of that to say, being the world reserve currency, it's known as the Triffin's dilemma. It's actually a structural problem. It cannot persist. And so now you have an administration that won the popular vote because the majority of America is screw this. I'm tired of working so hard and not being able to make progress. I'm tired of being in perpetual debt. I'm tired of being unhealthy. I'm tired of being fat. I'm tired of being sick. And Trump's response is, I have to fix this. Now, he hasn't openly said this, but in more or less words is, we can't be the world reserve currency. The one thing he did not tariff is gold. The one thing he set up a strategic reserve for is Bitcoin. And he hasn't said, the dollar, listen, in more or less words, Trump is saying the dollar has to be weaker. His American first investment policy in February was get your money out of the country. China, get your money out of our stock market, get your money out of our real estate market, get your money out of our land market, because you're highly inflating these assets. China doesn't get, the penthouse in Manhattan, Kyle, that's selling for $400 million. What sane human beings paying $400 million for a condo? No, you sell that to foreign investors, right? And so it's highly inflationary asset bubble in America. And so Trump is saying, get your capital out. And by the way, the 10-year, these bonds, these long duration bonds, you're losing in real terms on those as well. We're going to focus on growth over the debt. So you want to invest in our bonds, you're going to lose. You want to invest in our real estate, in our land, in our stocks. I'm imposing capital controls tax, a withholding tax. So I suggest you buy gold. I suggest you buy Bitcoin. And you look at a price chart, and that's exactly what we're living through. And I think at some point, this administration or the one that follows will either reprice the gold on the government's balance sheet or I think when people say, is the dollar going to be the world reserve currency still? I think, what do you mean by that? Is the question is, do you mean, is my pizza still going to be priced in dollars? Sure, probably. Who cares though? The question is, where's the world storing its cash balances? When we have a $2 trillion deficit and we're giving China a $1 trillion trade surplus a year, where's that $1 trillion going? I don't think it's going to go into long-term bonds and treasuries. I don't think it's going to continue to go into the Mag 7 and into penthouses. I think it's going to start flowing, or already is, into gold and Bitcoin until those are the world reserve assets.
One more thing too is I was sitting down with one of the members that's on the extended family of the Saudi royal family, and I had a meeting with him. And I had watched a documentary not too long before that about how Saudi was looking ahead, and now why they're doing all these giga projects. And, learning from Dubai, for example, UAE, and have to, get themselves off of the reliance on oil, and how they're building these giga projects to attract tourism and things like that. So I asked him, I said, man, you guys are looking for places to park capital. Like, why aren't you just aggressively buying Bitcoin? And he just looks at me and goes, how do you know we're not? And I was like, okay, got it. Enough said. So I think that there is potentially a lot of governments, or at least the people who control these governments, acquiring it quietly, because it's a dangerous game if your plan is to acquire quite a bit and try to control all the supply. If you start making that stuff public.
Yeah. So a few things. I think I think sovereign wealth funds, governments are absolutely buying. To your point, I think we're going to live in some type of hybrid gold Bitcoin world in the immediate future, because Bitcoin's not big enough yet to take on the 300 trillion. How do you get from 2 trillion to 300 trillion? Like, for example, if the United States were to come out and say, hey, guess what? All of your dollars are actually redeemable for Bitcoins. And for that reason, we're going back on a standard. It's going to be the Bitcoin digital one now. And for that reason, we, the United States, we're going to go on Coinbase and buy 5 million coins tomorrow. I mean, the price is going to go to $100 million of Bitcoin. Right. And so the game is, how do you get there in a way that's advantageous to you and your incentives of not front running yourself and acquiring in a way. And so what you see in Bitcoin are these very natural adoption cycles where clearly, listen, in everything else in life, with more demand, you find more supply. You want more McDonald's cheeseburgers, we can make them. You want more Nike shoes, we can make them. You want more gold, we can find more gold. You put the price high enough, Elon's going to go to Mars. He said he'll double the supply, right? Yeah. Bitcoin, you can't. And so the more supply comes from the market. If you want more Bitcoins, you got to go get them at $250,000 a coin. And so the problem is, if governments signal that they need a lot more supply, then it's just going to send the price up to get the more supply. And so I think we're living through this hybrid where if you're a government, a sovereign wealth fund, what's your ratio of trade surplus gold versus Bitcoin right now? You're probably buying, 90% of that trade surplus in gold, 10% in Bitcoin. And then eventually, as the market matures, you'll be able to weight that. And then eventually the better money will win. That's what I think. And going back to your Satoshi point, in my opinion, one of the most underrated genius of Satoshi is how Bitcoin was distributed. Is not only does this person not have any outside influence or control over the protocol, but gold, the United States at the time of Bretton Woods, we owned 2/3 of all the gold supply in the world. Now that number's down to about 50% if the gold is actually there. We all wanted an audit, we didn't get it. But let's assume it's there. We own half the gold supply. That level of concentration in an asset is very dangerous. And so Bitcoin, somehow Satoshi, through Bitcoin mining and proof of work, distributed the currency to the people. There's only a couple million Bitcoin on exchanges. Michael Saylor, God bless his heart, has spent 5 years using leverage to acquire as much as he can. He's at 3% of the total supply. It's a rounding error. So it's the notion that the people have the money by the time the governments need it. And how Satoshi Nakamoto, because if it was the Rothschilds or something, and they went to Goldman Sachs to launch it, and they each got a 20% allocation as like a founder's fee, then we're talking about having recreated the problems gold has. So it's both, how does a nation state take a $2 trillion asset and get it to 200 without front running themselves? And it's the fact that the people own it now that the governments need it. It's such a beautiful innovation. And I do think it's destiny. It's just going to take, time. It's just adoption, natural adoption.
Yeah. Jack, thanks again for coming by for this second part of our interview. It was really great talking to you, and congratulations on all the success. And if people want to continue to follow you, where should they do that?
First of all, I appreciate you having me. I mean, this is going to be a hell of an episode, part 1, part 2. And Jack Mallers is my real name. So, sometimes in this industry, you're not getting the real government name, but it is my name. So that's my handle everywhere. You guys can probably just search it in your local search bar and find me.
Cool. Thanks, Jack. Appreciate it.
Awesome. Thank you, brother.